Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, August the 7th, the year's 2022. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And let's see, we're starting into the second trading week of August, so let's just be mindful of risk management. Don't lose any more than you're willing to lose on any one particular trade. Looking at the weekly chart, you can see all the gaps have filled. The pound gap down, but it's up. As you can see, most of the pairs gap down. And we're 8 pips over the open, 4 off the high, and 28 off the low at the moment. So trading day's been open for 7 hours and 22 minutes. You can see we are below the opening range for the month. We're putting in the opening range for the week. 1,453 pips below the yearly open. Had a nice bounce off that yearly low. We are outside the inside bar of the day and week and month. Though we do have some inside bar action, especially on the week on a lot of pairs. And there's also a few on the monthly. So for you inside bar traders, simple horizontal line trade. The range, no pairs over 100 at this point. Once again, just a little over 7 hours into the trading day. Pounds at 33 pips. As you can see, it hit the buy zone, actually hit the short zone or sell zone. And if you waited, you were paid off. And it hit the buy zone. And hopefully you just scratched out. Or you might still be waiting. And when I say scratch out, it just might be a 1 or 2 pip or no pip gain or loss. And range is definitely too low to be thinking about rat trading. Okay, I don't think we've hit the weekly pivot quite yet. There's the or the daily pivot or the weekly pivot. Nope, we haven't hit the daily pivot yet. We missed by 0.2. Let's see, looks like we've been in and out of the lower wick zone, about 5.54 pips above it right now. For the weekly range, once again, not that much at this point in time. Wall method, not the best time to trade it, but you can see it has paid off because price has to range. Even with only a 3 pip range at the moment, you can see price has to range. It put in a low and ranged up about 33 pips and then came back down. So if you were fortunate enough to maybe catch the move at 60, or if you wanted to go for broke, hit the launch pad in the 2040s. I think it had a low of 47 if I remember correctly, actually 46.7, and then taking that ride to the north could have paid off almost 30 pips or more. And looking at the lowest high, highest low, you see we had a trigger not too long ago at around 71, ran up 76. So a chance for about 4 or 5 pips there. See, we had a higher low trigger at 77, ran down to 70. once again, opportunities. Now, some people are asking me, um, about trading this on different time frames. And one of the things you can look at this is looking at it on a daily. This would have been a very nice trade had you gotten in at 1873, taken that trade for a long ride. And one of the things I've been looking at some stocks. Any of you familiar with my work on StockFetcher? Back when I used to trade equities, um, but I have been looking at a few of the different stocks, and the higher low, lower high definitely pays off on the daily, especially if you don't want to day trade and sit there and monitor prices all day long. You can wake up in the morning or right before you go to bed. You can look where prices are. You can see the higher low, lower high. And if there's a trade to take, you take it. Otherwise, you come back the next day. And it's kind of a patience game. You just have to wait. Also, with Bitcoin and Ethereum, I've been looking at those, actually kicking myself for not taking the lowest high on Ethereum. That would have paid off about a 70% profit, if I'm not mistaken, if I would have cashed out. That's not bad over a short period of time, less than a year. Let's call anything less than a year a short period of time. So, and the thing is, this is very simple to chart. And you don't even need a chart. I mean, you could do this on the back of a envelope, literally. You just see what the lowest high is. In this case, we're using 34 bars to sync up with the 3 balls, but you can pick whatever time frame you want. And it works on different pairs. I mean, this is another trade, even though I'm pretty much focused on the pound dollar because I trade with Walmart in the mornings over the phone. But right here, there was this lowest or highest low, and then price came back, failed to make a new high, came back down. But you can see here from 138.34, there was a chance to basically pick up 800 pips if you wrote it out. And it can be tough to do, but and even here, if you would have taken the first opportunity, then when it went down and came back, you might be tempted to be afraid or something, but you just have to wait. And the thing is, you can pretty much just wait for the stocks. You can just wait for the day to end, and then you can set your trades for tomorrow. So if you were looking at this right here, well, the long trigger was at 133.17, and you can see it's at 135.24, so already a 207 pip gain. Even you could have taken it the first time or possibly on Friday. It was just another opportunity, simple trade, especially for those of you who don't want to sit in front of the screen or can't sit in front of the screen. Now, of course, the question would be, well, where do I place the stop? Well, what's stop loss or risk is a function of stop and position size. How heavy do you want to trade? And how much are you willing to lose per trade? So that's, depending on how much you're willing to lose, that's going to depend. Then you say, well, how many lots or mini lots or micro lots do I want? And then you can figure out where to place the stop. So that's a personal, it's placing the stops. You could be technical and say, well, I should probably place it here. Well, That's like 300 pips. I mean, what are you going to trade? Let's see, a mini lot, that's $300. Are you willing to lose to 300? I mean, if you have $1,000 account, that's 30%. You might not want to trade that heavy. So you have to decide. I can't decide for you. Now let's see, this is just looking at trade reminders on the weekly. Prices between the wick zones at the moment. Fade to pivot, so we want to buy. We had a lower high and a higher low so far. Okay, on the daily, we're between the wick zones. Fade to pivot, so this is all saying buy. And actually, we were talking about the pivots. One of the things, I think I mentioned a video last week. There was a missed pivot on H4, and I called it out, and sure enough, price came and hit it. But the other one was, there was this huge return bar, and you can see here, price never returned to the open until last week when we had that news come out. But you can see price returned to the open, and it's one of those things where whatever candle you pick for your bias, and you want to trade in the opposite direction, you have to let that candle close. So if you were thinking to go long at this level, but it was this candle being formed, you just have to sit on your hands and not trade until that candle closes. Now, it could have bounced up, and you might have missed the opportunity, but as you can see here, if you jumped in early, this might have been enough of a move to stop you out. Whereas if you waited and you see that open and it went down and you see it coming back, once it gets to that level you're looking at, that's where you could have jumped in and there was pips to be had. Because as you can see, it had to go and hit that pivot. It didn't have to go, but usually, as you can see here, price likes to take out these pivots. There will be some missed pivots to be taken out at a later date, and here's one here up at 21.49. So there's a good chance this pivot gets taken out possibly this week. You just have to wait and see. And it's not really predictions. This is just statistics. And let's see. So far we have a red August. Show year to date accumulated. As you can see, we haven't moved the needle yet this month. So we'd have to make either a new yearly low or a new yearly high to move it. And I'm not sure that's going to happen, but we have to wait and see. As far as range so far, range by month, 290 pips. So there's definitely some room to move on that monthly. So, fellow traders, I'm going to ask you once again if you would please click the like button on my videos so maybe they can move up in the YouTube rankings. Because unless you search for my name, YouTube doesn't put my videos out there. So I hope you all had a fun and safe weekend, and I hope you or wish you a profitable trading week this week. So take some of the points that I give you and Walmart give you, and take what you can use, and just try to remember them. Maybe you take some notes, read those notes before each trading session so you don't forget some of the simpler things, because as mentioned before, a simple algorithm will beat your seat of the pants guessing, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.